Let's talk about Rossell Tech, wherein we have Mr. Rishabh Gupta, who is the MD of the company, joining us on the show. And Rishabh, great set, and there has been a significant surge in your Q4 revenues. Firstly, congratulations for that. But what the street is excited to know about is that how sustainable is this revenue growth, and what drivers will ensure that this trend continues in FY27?
Hi. Thank you for having me. Yes, indeed, we showed a very good growth last year. We are in different industries where the tailwinds are very significant, and we're seeing significant growth not only in aerospace and defense, but in the different industries we're in, which is semiconductors and space as well. So we're looking at a growth like this for the next 2 to 3 years at least moving forward.
Hi, morning. This is Snehi also joining in. And your performance since you've demerged from the parent has been really consistent. I want to talk to you about your EBITDA as well as the EBITDA margin number. Let's start by talking about EBITDA. It's coming at 135 crores compared to just 15 crores this time last year. It's such a massive jump. Can you help us understand what has caused this and how sustainable this is? And more so on your margin front, you've given the guidance between 30 and 33%. You're already close to 31%. What's going to drive you towards that 33% number?
Today, our EBITDA margins are actually 15%. We're going to go up to 17 and 18 moving forward. We're looking at approximately 20% EBITDA margin moving forward. Because of scalability, we're doing a lot of FAIs right now, which are first article inspections, which require a lot of qualifications. And once those products go into production, that's when we see an increase in our margins moving forward. So the 15 should go to 18 and 20 in the short to midterm.
I'm sorry, apologies on that one, Mr. Gupta. I've made a mistake reading your numbers. So the EBITDA is constant at 15 and the EBITDA margin, like you mentioned, is at 15%. So apologies on that front. Just taking a look at what the order book is, can you give us a sense of how that how your order book is shaping up and any visibility on more deals in the near future?
Yeah, sure. So we received POs of 560 crores last financial year. Our total POs on hand are 750 crores. We also have strategic agreements for 3,000 crores. And we submitted bids for another 4,500 crores last financial year. The outcome of these bids normally takes 6 to 9 months. But for the strategic agreements that we have on hand, we have a pretty good outlook because most contracts in aerospace and defense are long-term in nature. So that needs to be executed within the next 2 to 5 years.
All right, but along with that, Rishabh, the company plans to move up the value chain into electromechanical integrated systems. Considering this, what impact will it have on your margins?
See, today, the advantage that Rossell has, we're on nearly every military platform that comes out of the US. So we want to increase the content and our products on each platform. So the plan is in a couple of years, by the end of 2028, beginning of 29, to move up the value chain and get into electromechanical system integration. So the value content that Rossell provides on all the different platforms go up significantly, and we'll get a much larger share from all the platforms we are on moving forward.
Okay, and with over 3,000 crores in strategic long-term agreements, can you help us understand what is the conversion rate timeline from these contracts?
So normally they place the PO 6 to 9 months before deliveries. So that's the kind of timelines we're looking at. And the execution for this should be anywhere from 3 to 5 years for the 3,000 crores.
All right, but what's the visibility of addition in your order book? Because I see that 715 crores is the number that is standing till 31st of March. How will the order execution will be looking like, the realization timelines, if we can help us with that?
Yeah, sure. For the 750 crores, we're looking at the next 24 months to 2 years. And for the 4,500 crores bid that we submitted, again, it'll be in the range of anywhere from 12 to 36 months moving forward. And like I said, it takes 6 to 9 months for those decisions to be taken.
Okay. Mr. Gupta, your revenue mix going ahead, can you give us a split between aerospace defense and non-aerospace defense? And what's the focus on the non-aerospace defense given the government's push towards private sector defense companies? How are you looking to benefit from this? And if you could help us with the mix?
Yeah, so right now, currently, we are 60% aerospace and defense, 40% non-aerospace and defense. Moving forward, that's going to be 50-50. We're seeing a lot of traction with our partners in the semiconductors sector and the space sector. And we're going to be seeing close to a 300 to 400% growth on our top line this year in the semiconductor space. So that's where we're seeing significant growth moving forward. And obviously, there are a lot of production ramp-ups happening with all our different customers in the aerospace and defense side as well. And that's how we're being able to increase our top line and our EBITDA margins currently and moving forward as well. So the split right now is 60-40, and moving ahead will be 50-50.
That's interesting. But Rishabh, just wanted to understand a bit more on the semiconductor business side, because like I can see that semiconductor business has emerged as a significant contributor and you are optimistic on the growth ahead. But in terms of the margins, how does the margin stack up for this business versus your space and defense verticals?
It'll be pretty similar. We're still doing wire harnesses for the semiconductor space. So we do the wire harnesses that build the machines for the semiconductors. So moving forward, again, it's going to be in the range of 18 to 22%. So for the industry we're in, whether it's aerospace or non-aerospace, we're looking at an 18 to 22% margin moving forward.
Okay. And Mr. Gupta, I was reading a very interesting article about your company some time back, wherein you are aiming to achieve 14 years of growth that you've seen, in the previous 14 years, in the next 2 years. Tell us what's that about and what are going to be some factors that lead to that?
See, we're on track to do that. We did that last year. We showed an 87% increase on our top line. We're going to be doing something similar this year as well. And if you include that, then that comes to that number that you had mentioned, the revenue we did over the last 14 years. So it's looking very positive. And this traction is coming from, like I'm saying, if you look at what's happening globally in aerospace and defense, I think most countries are increasing their GDP spend. If you look at the US, their spend on aerospace and defense is going up from 950 billion to 1.5 trillion. A lot of countries in Europe are increasing their GDP spend on aerospace and defense. So I think the potential is massive. We've barely scratched the surface. And a lot of the customers we're working with have decided to create a supply base in India. And we've already been able to partner with them and looking for many more partnerships this year and next year as well, which will increase our customer base and increase our geography significantly. And that's why Rossell is preparing itself for the growth with all these different customers and the production ramp-ups.
Okay, sounds good. And Mr. Gupta, on that note, we'll let you go. Thank you so much for taking the time out. Congratulations on the quarter that you've seen, and more importantly, good luck for the quarters to come. We hope to keep interacting with you ahead.
Thank you so much for having me. Thank you.
Thank you
Appreciate
so
it.
much.